Okay, guys, thanks for joining us here in the chat. Market Beast, Napoleon Macro, Infamous 5, Sdow, S&P 500, the SPY, the Dow Jones, and the NASDAQ. Let's take a look to see if we can understand the overall conditions in the market, see if things are still looking okay, or if we need to walk the other way. We'll make it short and sweet and get into it, guys. Welcome back, loyal family, if you're new here. We only explore price action, and thanks for sticking around, all of my loyal subscribers. Let's go ahead and dive right into this infamous 5 and the charts here, shall we? So today's March the 1st, 2022, and the current or the previous close of the NASDAQ is going to be $14,237.81, slightly positive 3% for the day. Okay. By the way, if you're new, just to keep everyone up to speed, the purpose of taking a look at the infamous 5 is what we're trying to do is measure if the markets will have enough momentum to climb back above or blast back above, whichever one, above the previous level of support. Let me just kind of erase it so we're all clear. I'm not doing anything spectacular, whether you believe in Fibonacci retracements or not. The only thing that I am trying to accomplish is understand that the markets will have enough momentum to get back above the previous higher low, because on this channel what we look for is higher highs and higher lows to verify an uptrend. And when the market actually fails to maintain support above a minimum case scenario, the previous higher low, which is identified here, this is a sign that the markets may be in a position to take a shift or have a pretty substantial retracement to the downside, if that makes sense. So hopefully that explanation is good for everyone. All right, so let's do that. Let's see what we have. NASDAQ is definitely below the previous higher low, which aligns with the 0.886 on the Fibonacci retracement. If you want to put this on your chart, remember, just take the low and measure the high on your Fibonacci retracement level. Remember, start from the low, okay, and then extend it to the high to have your lines placed properly, okay? So we do have an X for the NASDAQ, okay? As long as the NASDAQ is below, we've been saying this number forever, $14,600, okay? That is the critical level for the NASDAQ right now, meaning that we need to get a weekly candle close above this red line. Otherwise, assume that the markets are under pressure. Can it potentially be in preparation to consolidate below this level and blast off? Yes, that's fine. The only thing you have to look for is higher. Well, basically what you have to look for is make sure that the monthly candles bodies are maintaining some sort of structural level. So what you do is you just kind of put a horizontal line at that candle's body. So that level would be, I don't want to leave you guys with a million levels, but I guess this level is important. $13,800 was the previous candle's body on the weekly. To again try to identify some sort of structural floor to consolidate, right? To turn things around here, guys. Hopefully I'm explaining this well. It's very strategic, but unfortunately we do have, well, at least in the bullish case, right? We do have an X for the NASDAQ. So moving on over to the S&P 500. The previous close is going to be $4,373.95, slightly negative 0.2% for the day. All right, guys, so it is below the red line, the 0.886. That level is going to be $4,340. Remember, we're dealing with active weekly candles, and I apologize on the last video. Hopefully I leave a link for it where we said the market correction is here, but we failed to mention that they were active weekly candles, and you see this very large zip tie right after that video was posted. I mean, the buyers step in super aggressive. All right. So hopefully you guys have the S&P 500. The red line is a critical level, 4,340 cents, precisely 59 cents. Moving on over to the SPY. Previous close, $436.63, slightly negative 0.2% for the day. Critical level for the SPY is going to be $432.45. It is currently above that level. So again, we do have a red check mark for the SPY and also a red check mark for the S&P 500, again, active weekly candles. They have like 3 days and 8 hours to fully develop. So we're basically going to have freshly minted candles on March the 7th, 2022. Okay. Moving on over to the Dow Jones. The previous close, $33,892.61. Slightly negative close of 0.4% for the day. Okay. All right. Yes, we have another X for the Dow Jones. It is below the critical level, 0.886, and that's going to be $33,999.81. Last but not least, taking on over to the SDOW, and then we'll just kind of wrap up everything, give you guys my assessment. Previous close, $31.01, slightly positive 1.2% for the day. Remember, the SDOW goes up if the S&P 500 moves lower. And I do see triple digits incoming. Not tomorrow, not in a 1 hour candle, guys. I think eventually, even if the market moves lower, the red line is actually 29.50. The way that we're interpreting the SDOW, just to keep everyone up to speed, is it is currently above 29.50, which is basically, it kind of aligns with the previous level of resistance. And remember, when you're looking for a market turnaround, because the SDOW has been in a downtrend forever. Yeah, it's like seriously forever, guys. It's never been in an uptrend forever, right? But we were able to identify the 610-day resistance line as it recently broke through and then made a higher low. So the only thing that the SDOW needs to do at this point is stay above 29.50, and this is actually the bearish case scenario, guys. So if the SDOW can no longer puncture that 29.50 level, expect those triple digits incoming. I'm not sure how fast. I'm not sure if it's going to happen. Not guaranteed. Just my speculative observation here. Okay, not financial advice. Please do not use this as such. But yeah, guys. So we do have an X for the SDOW because in order for this to be a bullish setup for the overall market, you need it below 29.50. So yeah, we have an X for the SDOW. So let's wrap things up here. We have an X, we have X's, and we have red check marks. Yes, X's and red check marks across the board, which means there's no green right now, guys. There's no, there's no green right now. I'm in it. The market is in a position where it's making me feel uncomfortable that there's no real financial strength here just yet. And I remember saying that on the last video, saying that it doesn't look like there's no aggressive buyers. And like as soon as we posted the video, I mean, the market just ripped to the upside. So again, active candles. Let's see if the red lines, we went over one specific level with the exception of the NASDAQ. The critical levels. We need to get some weekly closes, some consolidative floors, something. If it continues to drop, then yeah, guys, you just have to accept what the market is giving us, and the market is giving us more sell pressure. Okay. So my assessment is the markets will continue lower if all the critical levels that we went over. In this case, if it acts as resistance, right, for the NASDAQ, and for the SDOW, the SPY and the S&P 500, if they fail to maintain support above those levels before the close, the weekly close, then these red check marks will turn into X's, okay? And then once we have X's across the board, yeah, this is not like a crash indication, guys. This is just simply letting us know where the markets are in terms of the uptrend. We're trying to see if there will be some sort of some sign of life, right? That the buyers are here consolidating in preparation to move the markets higher. Does it look like they are? It appears that they are. Let's just let this weekly candle close, because it seems as if they're pulling the rug, right, just before the close, or making vicious moves just before the close. And that's basically all I have for you guys. The markets are still under pressure. I'm not sure how much pressure, but yeah, still a lot of pressure, guys. All right, so you have the critical levels, and hopefully this video was useful. I feel like it was all over the place, but yeah, all the red lines, guys. S&P 500 must hold to show strength. SPY must hold the red line to show strength. The NASDAQ needs to seriously show some sort of strength and get back above 14,600. Dow Jones needs to break above that red line. Okay, close above, weekly candle above that line. And of course, the SDOW break below 29.50. So hopefully that brief summarization is clear for everyone. All right, that's the end of the video. Hopefully you enjoyed that. If you don't mind supporting the channel before you go by simply leaving an appropriate thumb, I would appreciate it below the video. Also leave a comment so that the YouTube algorithm can promote this video on the channel. Thank you for your support. Part of my razzmatazz today, every day, right? Also, if you're new, we explored the alternative markets, just Bitcoin for now. You can kindly join us here on this interesting journey, and we'll send that out to you momentarily. Welcome in. I'd like to take this opportunity to thank you all for your time. Remember, guys, always have a strategy before you enter. Keep that positive energy flowing. We'll talk soon, and bye for now, guys and gals.